Hi, just a quick follow-up video to our post containing our call the other day on the euro dollar that things were set to escalate towards the upside with smart money buying up all shorts around the 2.505 level as was exhibited in volume. We'd seen a large volume spike after some previous moves in the downtrend, and we'd passed a verdict on to members that smart money has begun buying up shorts at around this level here, and that things are set to escalate into high demand even if it is in the short term. A lot of feedback was received for this signal. A lot of people said that, oh, you're going counter trend in a clear, distinct downtrend. The Eurozone is messed up. Countries are asking for bailouts. You guys are totally wrong on this call, and that we're not going to trade it. We did have one person by the name of Mudar, Mr. Mudar. Thank you for instilling some belief in a trading strategy that does carry results. We were pointing out this move because smart money had clearly indicated that they were not willing to go any further down, at least in the short term. This was exhibited here at this candle, where we saw, after a fair amount of trading had already gone through, that smart money has had enough of the downtrend for now and wants to curtail prices to this level until some other action is perceived, which at the EU summit beginnings yesterday, people may have noticed that the results caused exactly that move, and we escalated towards long very, very quickly. Now, we had said that people should look to buy in around the 2.5050 level. A lot of people may say that, well, we lost out on the 57-ish pips that would have resulted had we bought in at the 0% Fibonacci retracement level of this downtrend. That is all well and good. That is a valid statement. But what we plan on doing anytime we construct a counter trend is to wait for confirmation. And you should really try and capture the juice of the trend as opposed to just the tops and bottoms, which can be a little more unreliable. So had we gone into a trade at this level here, it would have been fine, but it would have had to have had a stop loss that was fairly wide for a lot of scalping sort of day traders. So a 37 pip stop, 40 to 50 pip stop would have been valid, and people could have bought in at this level and continued on long. If people had bought in at the 0% level, they would have gone on to make a 181 pip move over that high demand escalation that we had called out a few days ago, that practically everyone disagreed with us on. But the charts don't lie, and the charts said exactly what we were reiterating, which was that smart money has had enough of the short selling for now, at least in the short term, and that news or no news, there is a scenario where smart money will escalate and gear up for high demand. Typically in these situations, the market goes into accumulation, which is a phase where after you come out of a markdown in a downtrend or a markup in an uptrend, there is a period of accumulation where smart money accumulates their very big positions to go in one direction or the other. So at this stage, smart money could have gone down, but we didn't see any indication of smart money buying up, selling off any buy orders here. We only saw a fairly widespread candle here on high volume, which indicated that smart money was not going to go further south for a while. And over the next few candles on this 4-hour chart, you can clearly see a classic accumulation period being formed over this 92 pip range, where smart money is undecided on where it is to go, followed by a very brief period of manipulation where the markets collapsed for a little bit, and just before the EU summit went ahead. This can be viewed as markets collapsing because they think that the EU summit will deteriorate. That is commonplace sentiment, and that's perfectly understood. When you think of it from a smart money point of view, this was a stop run sort of behavior. Not entirely a stop run, but a manipulative behavior where they would kick out people in the market who are looking to go long at that point who are working under the same speculation, or around this mark they would raise the prices suddenly and then shoot back down to sort of clear up this space, pull out a lot of traders from this market, mostly retail traders, by killing off their buy orders and killing off their sell orders at the same time to clear up their positions. But as you can see from this big candle, the sell-off here exhibited a clear indication that the market would then go into a very aggressive long move. And this is because we had smart money firstly indicating to us that we've had enough selling for a little while, we want to go long, but we're not decided yet. The downtrend stops, goes into accumulation at this point. And here we see a very sharp sell-off, which indicates that smart money is building up an aggressive position to go counter trend. By going short so quickly over such a small period of time, this is a 4-hour candle, they effectively killed off any traders who were at that position wanting to go short. They obviously, to buy into any position, they have to have someone to sell them something. So by going aggressively into this sell position, they were able to kill off a lot of sell orders placed at that point. Everybody's speculating that the market would continue to go down for a little while, and by doing that they built up enough of a position over this period of accumulation to have a strong buy position and move in the direction that we had speculated from day one, at this point where we had said that the market looks like it's going to pull into a phase of high demand. For people who had bought in at the 0% retracement level, where we had said that we aren't going to buy in, we're going to buy in at the 1.2505 level, around this mark. For people who bought in at the 0% retracement level, they would have captured a move today of 181 pips. For people who captured the move from the level we advised, which was 1.2505, which was really to make sure that we've confirmed the move, that if the market makes a move in this direction, we need to confirm it by seeing some substantiated activity before we go with the move. And that's really why we didn't buy in at the 0% retracement level. Well, we bought in at 1.2505 and we trailed the trend all the way to 126, 125 pips before we pulled out of this trade. So that is basically a follow-up video to our initial call, which stated that you should prepare for high demand around this level, and that's exactly what's happened. So I hope you've enjoyed this video. We'll keep coming back with some interesting, controversial calls, as we always make, and prove to you that counter trend trading and basically understanding how the markets really work is an important, a very dismissed component of foreign exchange trading that tends to leave traders in the dark more than it ever brings them any profits. So have faith in the ways of smart money, because at the end of the day, us retail traders, people like you and me, people like us, people like all the members of ITM Financial, we don't move the markets. Smart money moves the markets, the banks, the hedge funds, the institutional investors with their hundreds of billions going through the Forex market every single day. They are people who move the market. So if we follow what they do, if we follow investor sentiment, we can profit along with them. There is absolutely no chance any of us stand in going against what smart money is doing, because their orders are much larger. It's commonplace knowledge. It's very simple to understand. So I hope you've enjoyed this. Our signal was correct. It has indeed gone through very aggressively, the 38.2 that we advised that it may touch and retrace. We had said that it would go up to the 38.2 and possibly retrace. Well, it's broken through the 38.250, attempted to hit the 61.8 golden ratio before it's retraced temporarily. Now, a small little call for you here. Notice that the volume is on this pullback is not as great as the volume on the initial indication put forward by smart money that we're buying up shorts at this point, building up a position in accumulation phase. Notice the volume here is higher than the volume of this pullback here. So this is basically grounds for further movement to the upside. However, having said that, that claim cannot be substantiated yet because it's the second day of the EU summit, and we have no idea what's going to happen. When those people get in there and talk about things, and if they come to a resolution, we will have a confirmation then, and we will see things move to the upside unless the US comes out with something that strengthens their economy and we see some more accumulation or a move to the downside if the US economy is stronger. Anyway, hope you've enjoyed it. We'll keep coming back to you with more, and congratulations to the few members, particularly Mr. Mudar, who wrote in saying, I hope you guys are right, and we told him to exercise patience, that we had good faith in this particular trade setup because Smart Money had given us all the clues anyway. We were just waiting for them to make their move, and they did exactly that early this morning. So congratulations, Mudar, and congratulations to anyone else who we don't know who may have acted on our signal, taken it, and profited quite nicely for 130 to 190 pips on this one trade. All right, have a nice day. Happy trading week. It's the end of the week now. It's Friday. We have yet to see some activity come out of the EU summit. So stay out of trading until the early hours when they're making most of their decisions. But there are plenty of opportunities, even when there is high volume news. There are plenty of opportunities to trade, and if we come across any, we will definitely send you the signals for them. All right, take care. Have a nice day. Bye bye.